More broadly, the transports have been on a tear recently, the group climbing nearly 17% over the last month. So where are they headed next? Time to go off the chart to Todd Gordon of Ascent Wealth Partners. Todd, what are you looking at?
Hey, Melissa, we're looking at the air freight and logistics part of transports rather than rails, truck, and airlines. They take about 30% of the IYT transportation. And the two stocks I'd like to discuss here, UPS and FedEx, are about 20%. First, let's take a look at the IYT. The stock has been sharply kind of moving up towards a breakout level at about 201. That's the resistance. Below that, you look at the IYT SPY ratio starting to move up since the end of May. So large retailers were on a timeline to build out their e-commerce platforms pre-COVID, but this has obviously driven more guys online, more shoppers online, more products are being shipped, and the two biggest beneficiaries are UPS and FedEx. Now, this is within the context of Amazon sort of doing their last-minute delivery program, trying to compete against UPS and FedEx, but they have an immense air fleet, delivery fleet, international shipping networks, big global operations. It's going to be hard to duplicate. And just for full disclosure, we hold UPS and FedEx in our strategy. So if we look at the FedEx monthly chart, it traded down during the initial COVID response to the lower end of a big support channel right around 85 that it really didn't even fully test. That channel goes all the way back to 1993, so pretty significant. On the weekly chart, the $200 level is key resistance in FedEx. We'd like to get through there to confirm that we're going to continue to go. FedEx is doing fine post-Amazon. Their last report, they showed B2C deliveries moved up to like 72% of volume from 56 a year ago. It's a lower margin business, but the two companies are implementing surcharges in the holiday season that they expect to continue through COVID. So UPS switching over there, that's the clear winner in the transports and industrials from a technical point of view. BofA and Bernstein improved their outlook on the stock. It's yielding about 2.6%. UPS on the monthly chart, the breakout has already occurred, clearly ripping on the upside. We might be needing some resistance around 170 that might offer a near-term pullback, and that's sourced all the way from the credit crisis lows. UPS earnings have been extremely strong, again, with that surcharge in the holiday season.
Todd, good to see you. Thanks. Todd Gordon, Ascent Wealth. Brian Kelly, what do you like in transports?
Yeah, I mean, I think the e-commerce play is the way to go. And UPS, FedEx, both of them are benefiting. I don't know that you've shipped anything recently, but they're suspending their guarantees that it's not going to, they're not saying that it's going to get there overnight anymore, yet they're charging me the same price. So I actually think they're in the catbird seat in this. If you want to stick with the e-commerce play, if one other way, and it's not even in the transports, but it's kind of an e-commerce adjacent, which is a real estate term, I would say Prologis Trust, they operate a whole bunch of warehouses, which you need in e-commerce. So that's another way to kind of play it.